What's going on, guys? Bryant here. Today is Wednesday, December 4th, 2024. This is the 15-minute time frame for the Qs, so the Nasdaq ETF. Yesterday, I opened up a swing trade targeting 520. And this video is a recap on some of the things that I was looking at. The market is currently open and I do still have a position open. It is on the Nasdaq futures, so we will take a look at that. This is it on option strat here. This is yesterday just before the market closed, in which I was addressing that a shot at the QQQ 520 looks appealing. So this is the gamma exposure profile in which I was looking at, which we will take a look at in further detail here. And then we're also going to take a look at exactly what I was looking at yesterday, as this is the quant trading app levels from yesterday. Link is in the description down below to find out more about quant trading app. And lastly, this is the 520 call on the Qs for next week, Monday's expiration. The average price during the consolidation period during power hour was around 185, and it opened at around 366 today, which was up about 95%, or roughly about $180 per contract. So let's jump back to yesterday right before the market closed. And why did I say that 520 looks appealing based on this graph right here? If we click this, it'll bring us to the gamma exposure channel in the quant trading app Discord, and we can see exactly this timestamp in which I was referencing right here. Or we can head over to quant trading app and take a look at just the gamma exposure for the Friday expiration and what it looked like yesterday. So I went ahead and selected the date, which was yesterday. This is the Qs, and then I submitted this. This has loaded up the gamma exposure profile for the Nasdaq yesterday, starting with the start of the day. So this is 9:30 a.m. Eastern time. The Qs were just below this key strike right here, which is 515. Usually when you see a gamma exposure profile like this and you see a strike price that has a lot of positive gamma, and the instrument in which you're looking at, in this case here, it is the Qs, is in an overall net positive gamma environment. In other words, this is where the Qs were. We can see all of this positive gamma. It's in all this positive gamma territory, and the overall net GEX for the Nasdaq is positive. This is a positive number. There's a lot of positive gamma exposure. We'll see that price will often like to head towards what we call P1, and P1 just means the strike price that has the highest amount of positive gamma. However, I don't like to speculate that much. I would much rather wait to enter the trade when there's enough confirmation or enough signs, especially if I'm taking some sort of a directional trade. In other words, there is an obstacle in the way, and that obstacle is 515. In order for the Nasdaq to get to 520, it needs to clear 515, or that's just the way in which I approach this style of trading. I see this as a large obstacle. I want to see price clear this first, and if it can hold above this strike price here, then I'm going to think that it will naturally want to head towards the next high positive gamma strike. In this case here, 520 was a strike that had more positive gamma than 515, even though 515 was so close to the current price. That's what caught my interest, but it was still too early in the day to open up a swing trade. For the most part, swing traders prefer to open up their trades within the last 90 minutes of the trading day, preferably even during power hours. So the last 60 minutes of the day is when a lot of swing traders like to open up their positions. And that is especially useful for anyone under PDT, because it means if you open up the trade, you are not going to be tempted to close it during the same day. By opening at the end of the day means you're inherently locking yourself into that position until the following day. Now let's take a look at price action. As we can see right here on this right hand side, this is where the Qs opened up, and we can see it consolidated around 515. This is to be expected when we see a gamma profile like this. And what I mean by a gamma profile like this is 515 has a lot of stuff around it. It has a lot of call volume, a lot of put volume, it has a lot of positive gamma. It also had a decent amount of open interest right here that we can see in the spike in the background. This is our open interest before the market opened. Before the market opens, QTA caches the open interest, and then once the market opens, since we can't see the update in open interest, it monitors and tracks the volume, and that's what we can see happening right here. That is a lot of confluence at this 515 strike. It is also the strike with the highest amount of absolute gamma once the market had opened. 515 was also just about VWAP, and it was also just about the 2-day anchored VWAP. So that is a lot of levels right around this 515 strike. The expectation will be that price action will be choppy, and in my opinion, unless you're selling some sort of a put credit spread, You don't really want to hold an option during a period in which you think there's going to be consolidation. You'd much rather want to open the trade when you either have some sort of confirmation or you start to see some signs of momentum. On top of that, it's amazing when the technicals align with what we're seeing in the data. The gamma exposure is what I will refer to as some of the data, but if we take a look at this from a technical standpoint, there was a pattern that was forming here, as we can have this ascending wedge or ascending triangle, whatever you want to call it. Some people might call this a flat top breakout, as we can see there was some sort of a resistance here, and then it was coming up, and we can see the pressure is building and building and building, and eventually that pressure wants to break in a certain direction. In this case here, if it is ascending, we can see that buyers are becoming more and more aggressive as the day progresses, which means they're willing to buy the offering price of this particular instrument. Again, in this case, we're looking at the Nasdaq, which is the QQQ. Buyers were willing to pay for the asking price, and as the day progressed, they were willing to accept buying at a higher price over and over and over, and we never saw the price actually break below the previous swing low intraday, as it just kept rising. Think of that as pressure cooking to the upside. It's just pressure cooking to the upside. And this is why, in my opinion, being able to understand and interpret and read price action is important, because even if you're unaware of any of this type of analysis or data and none of this makes any sense to you, if you can at least understand the psychology of what's happening behind the chart here, obviously we can just draw out a trend line and we can see that there's some sort of a technical pattern. But at the end of the day, the technical pattern and what we're seeing on this candlestick chart is just a representation of what's happening underneath the hood. Obviously, we all know how the trade played out, but this is just the pattern here, and I'm just showing that why I was targeting the 520. It was a strike price that had a decent amount of positive gamma around it. And I'm also hoping to shed some light regarding on why didn't I open up the trade much earlier in the day. Is because the expectation will be a chop around this key gamma strike, and there not being enough confirmation or enough signs yet in the price action. I don't want to open up something like this because I'll probably end up second guessing the position. It's still a little early in the day. However, during power hour, if you start seeing signs of momentum, if you start seeing confirmation of the direction in which you were thinking price action is going to go, this is more than likely going to be a better time frame to open up your trade, as you won't have to deal with the mental exhaustion that comes from holding a position all day and probably second guessing if you're even in a good trade. Not to mention the fact that if you're buying a call option, you'll be dealing with a lot of time decay if the market is just being choppy. Now let's return to the gamma exposure and see what happened as the day progressed. So again, this is 15 minutes after the market opened, or we can come up here and click the same timestamp right here, 15 minutes after the market opened. We can see what's happening with the Qs, but let's just jump forward in time. So we see we're now just above 515. We can see what's happening here. Look at how dominant 520 becomes. So this is interesting. And on top of that, we see that there's still a lot of positive gamma all around it. Let's continue to see what happens. The market chops around here. The Nasdaq chops around. It's now 11 a.m. Eastern time. Market is still chopping around. It's now over a couple hours into the trading day, and we can see what's going on here. There's still a lot of positive gamma up here. We can see the volume popping up in the background. There are traders willing to speculate around this 520 strike. There is some interest higher, but it's not significant. In other words, I wouldn't really expect the Qs to go past 525 this week, at least based on this timestamp here. But it's good to know that there is some sort of interest past the 520 strike. That's a tip that I usually point out in these videos. I'm generally not super confident if the target in which I'm looking at is the only one that is a spike. In other words, if there was a spike at 525, I would have been extra confident in grabbing that 520 call. I probably would have grabbed it even earlier in the session, or as soon as 512 cleared, I would have grabbed it much earlier. But because this is the only strike price that is pretty dominant, we also have 521, which is the second highest positive gamma strike. I like when I see two dominant strikes in the same direction in which I'm willing to speculate on. It is good to know that there is some decent positive gamma higher up, even though it's not the perfect scenario in which I would usually like to look for, but it's still enough to give it a trade, or at least enough to consider opening the trade. If we continue, this is now 12 a.m. Eastern time. This is 12:15, 12:30. We can see it's still chopping around here, but we see this positive gamma is still holding. This is now 1 p.m. Eastern time. And now we can see that we have a first real clear push off over this 515 level, as it's practically at 516. This now becomes support. That's the way in which I interpret this. Now that we have confirmation that we have cleared this 515 level, it means we can start thinking about a trade targeting 520. Because if we're at 516, that's still 4 points up. In other words, we can give it about a 1 or maybe a 2-point stop loss, because in this case here, the Qs should not break back down below 515 or the 514 area. It's good to think of it as a decent range. So around here becomes, if this level is breached or this zone is breached, we can stop out below this level, because it means this trade idea is rendered void, because this is something that's happening that should not happen. In other words, if we break below 515, that should not happen. Therefore, I don't want to be in this trade targeting 520. This is the break here that we're looking at. So this is right here at 1 p.m. Eastern time. Let's stretch this out. And I'm actually going to turn off all of the studies for a second, and let's just draw this 515 on the chart, which would be right here. This is that strong initial push that happened off of the 515 level, and that's what we're seeing right here. Now, if price was to come back down to the 515 area, the expectation would be that this holds as support. If this level was to break, this is our zone. From 515 to 514, the Qs should not breach or close below this zone. If it does, we will take a stop loss. However, if it holds, the expectation is that we're going towards the next high positive gamma strike, which is 520. So this matches what is a good setup, but because we're essentially looking to risk around $1.50, around $2 or so, to potentially make anywhere from $4 to $5. So there's enough potential profit that makes this worthy of a swing trade. Here's 115. We continue along. Here's now 1:30, 1:45 Eastern time, and now we're at 2 p.m. Eastern time. So 2 hours before the market closes, we see now how dominant this strike has become. There's a lot of call volume here. It is also the highest absolute gamma strike. All of this just reads as a massive support strike. That's the way I interpret it. Forget trying to understand all the nuances of gamma exposure and all the intricate calculations that happen behind the scenes with all the data. Unless you are looking to build a robot or you are a robot itself, all of those nuances don't really matter. At the end of the day, you are a trader and you are here to manage risk. How can you act on this information, and how can you analyze your risk, or how can you build together a trade strategy? All this is saying is support. We have a strong support level. Market should not go below this. If it goes below this, I'm stopping out, which means this is your risk, and then you're just going to weigh that against what is your possible reward. And it looks like your reward is much larger than what your risk is. So therefore, this should meet the criteria of a decent setup in your playbook. A video like this is just showing how I interpret this information, why I decided this was a trade worth sharing, and why I'm also doing a video on it. If we continue along in time, we can see as the market progressed, this is now power hour here, 45 minutes left in the day. We still see a decent amount of positive gamma, and then this is 30 minutes before the market closes, and then this is that timestamp 15 minutes before the market close. I should have pointed out at the beginning of this video, by the way, that this is for the Friday expiration. So this is the December 6th expiration, which yesterday at this point was a 3 DTE. So this data that we are analyzing is for Friday. It is now Tuesday within the same week. So there's still a decent amount of time for the Qs to head up to this target. Now you might be asking yourself, Brian, why did you trade the Nasdaq? I realize you rarely ever talk about the Nasdaq. You mostly trade the SPX and the SPY. Well, this is the thing. This is the SPY. If I were to pull this chart up here, there's a lot of gamma around the SPY, and the chain looked a little bit more compressed. It just looked a little too choppy. There wasn't that much room left for the highest positive gamma strike for the week, which is 605. At the start of the week, some of you guys know I like to analyze what's the gamma exposure is for the full week for the SPY. So this is the levels here at the start of the week. I already know 605 is the dominant strike. This is coming from the gamma exposure for the SPY at the start of the week by aggregating Monday, Tuesday, Wednesday, Thursday, Friday expirations. This is our gamma exposure profile. SPY is already being choppy around 603, 604. There isn't that much room left for it to go towards 605. So even though I'm thinking it's going to go towards 605, it's not really a trade I want to take. So yes, we hit 605 or we gapped up over 605, but I'm looking for where's the opportunity, and I'm weighing the opportunity cost and I'm assessing the risk. It doesn't seem worth it because there isn't that much reward reward left on this trade to target 605 relative to the Nasdaq, which is currently close to 515, and there being about 5 more points to go. As we can see, the Nasdaq is up 1% today, whereas the S&P 500 is only up 0.40% today, or 0.42, 0.43% today. The Nasdaq is up almost double how much the SPY is up, and that's something that's important to be able to weigh where is the greater risk to reward, where is the opportunity for a greater reward. I also trade the futures a lot, and I trade futures options. So that's why I like to also run a trade on the futures that I can close in the pre-market or the after-hours session, because there are times where the market gaps up, and then during pre-market it runs, and then by the time the market opens, let's just say there's a catalyst pre-market, it comes right back down to where it opened. So I will often mix futures trades as well as the options on the ETF. I will sometimes mix a spread as well as just buying an option, or as well as selling a put credit spread. I like to mix all the different strategies together to kind of spread my risk across different strategies. In this case here, this is a broken wing butterfly on the Nasdaq. I targeted 21,400, and that came simply by just doing this. So this is the Qs. If we are right around here when I'm thinking to open up the trade, if I went here and I dragged this up to 520, I saw that this was about a 0.75% increase, as that box on our chart right here, as I drag my mouse around, is letting us know on Thinkorswim. And then if we were to open up the Nasdaq here, on the Nasdaq, if we click right here around the same time, and then we just drag our mouse up, I'm just looking for where it says it's about up 0.70% to 0.75%, and that was loosely around 21,400. So when I decided to structure my butterfly, I knew that I wanted this to be the epicenter of the butterfly, and that's what we see right here. So I open up a broken wing butterfly to have no risk to the upside. In other words, it doesn't matter how high the market goes for this Friday here. And that's why I decided to target the 21,400 call for the body of this broken wing butterfly. The trade is doing well right now. The 520 call itself, I usually close these types of options as soon as the market opens. And if there's enough size, I would try to hold some sort of a runner, but I will often just close these. Anything around 100% I think is great for an overnight swing trade. This is the Monday expiration, which is December 9th, instead of the Friday expiration, which is December 6th. That's something I also like to do. Instead of trading the weekly option, which is the Friday option, I'll just go with the Monday. It just has a little bit more wiggle room to be wrong, because theta decay is harsh if you're trading the same week expirations and the market consolidates overnight, or if the Nasdaq just pulled in a little bit. Let's just say it opened up around that 514 level. This contract probably would have been down a little bit, but then it would have been down a little bit more because of time decay. If we're buying an option around $1.85 and it's opening around $1.20 or even $1, that would have been a little bit disheartening, and it becomes harder to hold. By going with the Monday expiration, it just means the time decay is not as severe. And obviously having a broken wing butterfly means I don't really have to worry much about the time decay on this trade at all, as it is positive theta also now that the market has moved within the range in which I'm expecting it to be. The break even on this butterfly is all the way down at about 270. So 270 is all the way down around here, which is pretty much where the breakout occurred during power hour yesterday. So this entire range here is under the tent of the butterfly. And obviously, since it's broken wing, it doesn't really matter how much higher the Nasdaq goes. Lastly, I just want to bring to attention something. Whenever you're trading the Nasdaq, it's also neat to just take a glance at what are some of the other major tickers within that index. What are they doing? So we take a look at it. I'm just putting out the ones that pop into mind. We can see that Apple was having a really good day yesterday also, as it was trending up. We can see that Nvidia was holding, and then during power hour it also started trending up. It sold off last week, but it was able to make back up most of those gains, so it still had some room to run. Amazon looks pretty similar to the Qs. Same thing I believe with Google. Pretty similar here, as we can see. If this was the last horrible day in Google, it slowly made back some of those gains as it consolidated on Monday and Tuesday. The expectation would be that it would at least go up to here, possibly even fill this gap right here at 176. So just taking a glance around at the major individual stocks within the Nasdaq ETF is also a good little tip to have in mind. I don't do it as often whenever I'm trading the SPY, just because the SPY is such a larger index, or ETF, or the S&P 500 for that matter. But if I am looking to take a directional trade on something like the Nasdaq, I will often just glance around to see what's happening with some of the individual tickers, even though I rarely take trades on these symbols anymore. Guys, if you enjoyed this video, leave a comment down below, like it, and share the video if you learned something. Links to QTA, which is just quant trading app, is in the description. This is the quant trading app Discord. The Gamma Exposure feed is available for gold members within Quant Trading app. This is the Quant Trading app platform in which there is historical data for gamma exposure levels on any of these symbols here, as well as the 0 DTE. But this video was not about a 0 DTE trade, it was about the swing trade. Thanks for watching, guys. I'll catch you in the next one. Take care.